Nigeria's annual inflation rate dropped in January to 24.48% after the Statistics Office revised the data used to calculate household expenditure, raising questions on how the Monetary Policy Committee will interpret the rebased data at its ongoing meeting. Opeyemi, Agbaje, CEO of RTC Advisory Services, comments on the main changes in the rebasing exercise outcomes. Hello, this is Bode or Shosami on Global Business Insight, where we look closer at the main business headlines. First, some of the main stories. Just out, UK annual inflation rose to 3% in January from 2.8% in the previous month and above expectations of 2.8%. The highest upward contribution was from transport, food and non-alcoholic beverages. Europe's largest lender, HSBC, reported annual pre-tax profit of $32.3 billion, marginally missing estimates, and on revenue at $65.9 billion, down from $66.1 billion in 2023. The bank will also repurchase up to $2 billion in shares by end of Q1 2025. US stocks were mixed, making gains in the final minutes and with potential policy moves by the Federal Reserve and President Trump policy thrusts in focus. A majority of stocks in the index closed higher, but communication services and consumer discretionary were a drag. The S&P's top sectors were energy, boosted by a rise in crude oil futures. US President Donald Trump said auto tariffs, probably to be announced in April, will be around 25%. Last Friday, he said levies on automobiles could come as soon as April the 2nd, the day after Cabinet are due to deliver reports outlining options on reciprocal tariffs and how that can be executed. 1 in 5 Americans are reported to be purchasing more items than usual, primarily due to concerns over impact of coming tariffs. Spanish bank Santander Executive Chair Ana Botín said yesterday that it will invest over $2 billion in Mexico during the next 3 years. The announcement was made during an event in Mexico's capital where the company presented its 100% digital bank, Open Bank, that is already operating in Mexico. Intel shares spiked up 13% after a report that Broadcom may consider a play for the company's chip design and marketing segment, while Taiwan Semiconductors manufacturing company TSMC is also keen on a stake or complete control of Intel's factories. Talks are still largely informal. Today at 12 noon GMT, we get the first South Africa budget under a government of national unity, which could mean a somewhat different dynamic. There is little room for tax hikes while keeping a lid on spending, while the big issue will be about finding new levers for growth and a better handle on debt, as the deficit looks set to be wider with a higher debt to GDP ratio. Rating agencies will be looking at the trajectory of the debt burden and discipline in fiscal spend. They are calling it a complex balancing and juggling act, juggling austerity, reforms, and finding new incentives to help growth in a struggling economy facing a tough, uncertain external context. South Africa is also facing challenges with the new U.S. administration. Yesterday, South Africa's Foreign Minister Ronald Lamola said the U.S. had not responded to attempts to discuss President Trump's executive order cutting off aid, but that China had pledged some form of support. U.S. Secretary of State Rubio is not attending the G20 meeting of foreign ministers this week in Johannesburg, after he expressed disapproval of the theme solidarity, equity, and sustainability. While South Africa is not hugely dependent on the US, for some, there is concern it may be disqualified from the preferential trade status it enjoys under the US African Growth and Opportunity Act. impact. The US is planning more talks with Russia on ending the war in Ukraine after an initial meeting which excluded Kiev, a departure from the previous approach of isolating Russian President Vladimir Putin. It was reported that at the meeting, Russia hardened its stance, notably insisting it would not agree to the NATO alliance granting membership for Ukraine. The meeting yesterday between Russia and US foreign ministers, however, laid some groundwork to pave way for further discussions, which could be read as improving chances of ending hostilities that have gone on for over 3 years. A permanent end to war will require robust guarantees, especially for Ukraine, and many have said NATO membership has to be on the cards to avert another Russian invasion. There are also fears that Trump will be more favorable to Moscow's terms, and early signals are pointing to giving in to some of Putin's core demands before talks even began. Russia Foreign Affairs Minister Lavrov said there was agreement to appoint ambassadors to each other's capitals and openness to removal of obstacles like reversal of expulsion of diplomats and revisiting the seizure of assets. Lavrov also said normalization of relations could also mean lifting of sanctions. U.S. Secretary of State Marco Rubio said the EU was going to have to be on the table at some point, adding that to decide on concessions will require hard, difficult diplomacy in closed rooms over a period of time. Yesterday, we looked at the scenarios and said it looked like the more likely situation would be a fragile truce supervised by peacekeeping missions but excluding NATO membership for Ukraine, at least not yet. The UK Prime Minister Starmer said the UK is ready and willing to send British troops if necessary once there is a peace agreement, in contrast to Macron and Scholz's more cautious approach. So far, Lavrov has said that any European peacekeeping deployment was unacceptable, while Zelensky said they will not cooperate with any peace brokered behind the scenes without their involvement. And there are other questions. How will Ukraine settle the $100 billion invoice recently served on it by the United States administration? All sides will definitely have to shift position one way or another, which is the point of negotiations. Macron is holding another meeting this week with European allies as France seems to be taking the lead at a time when the German Chancellor Scholz faces an election. That's on Sunday. The uncertainty of a fragile truce will weigh on the economy in a region urgently in need of economic revival. Leadership is required to push for a clearer path to peace, which can be a better foundation for more robust economic growth. Yesterday, we got Nigeria's headline inflation reported at 24.48% year-on-year in January after it rebased its CPI to reflect changes in consumption patterns. When it announced the rebasing exercise last month, the National Bureau of Statistics said consumption patterns had changed significantly since the last rebasing, and it would use 2024 as the new base year when calculating inflation. Mr. Opeyemi Agbaje is CEO of RTC Advisory Services Limited, a leading strategy and advisory firm based in Lagos. He comments on the data release.
I have had the opportunity of reviewing the National Bureau of Statistics report on the recently rebased Consumer Price Index. I was interested in evaluating the process the NBS went through in the rebasing process. I could see that it was basically two processes. One, updating the year, the base year, which was done to 2024, and then adjusting the index to reflect consumption, current consumption patterns. Observed in respect of the index, that the weighting attached to food was reduced from, I think, 51% to 40%. And the weighting attached to transport, telecoms and information, health care, and education were increased. By and large, those were the significant changes I saw in terms of the weighting, which, in my view, were rational changes to reflect the typical consumption of an average citizen. Like I said earlier, in terms of the base year, it was updated to 2024, which is the most current, the most recent year that you can find. Of course, the normal process of surveys to obtain pricing was done. I observed that the CPI is a broader and more comprehensive process with a lot more, I think up to 900 items or more, and some division divided into portions of or categories of products. On the whole, I think the process that I saw appears to me to have been credible, and therefore I do not think the process on its own can be faulted. The concept of rebasing on its on the other hand cannot also be faulted. I believe it's a proper thing. If you're looking at prices, the closer those prices are to the current period, the better. Of course, we are also awaiting the rebasing process in relation to the gross domestic product (GDP), and these are conventionally done for the GDP every 5 years, and the last one with the call was done, I think, in 2010 or 2011, as the year done in 2014. So I would be happy to endorse the fact, one, that we've done a rebasing exercise, and secondly, that we appear to have followed what seems to me like a rigorous process, both in terms of the pricing surveys and the weighting of the goods in the consumer price index. Having said all of that, in terms of the outcome, the inflation figure has dropped from 34 almost that we had in the last process to 24.48 with this updated process for January 2024. That's the headline inflation. And the food inflation, I think, 26%. Both of that will please our economic managers. I think they'll be happy to have this kind of. We've had a lot of bad news. I think this reflects maybe a break that we deserve to have, so that we can better communicate the actual conditions of the Nigerian economy. I think we should scrutinize the process, as I've tried to do, rather than discuss around the outcomes. The outcomes will make the economic policy managers happy. It reflects better the conditions of the Nigerian economy. I'm expecting that we would have even better results with the GDP rebasing. And I think that, like I said, we deserve some breaks.
Asia Pacific stocks traded mixed after Trump said tariffs for autos, semiconductors, and pharmaceutical imports could be in the neighborhood of 25%. Well, that's all we can take on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye-bye.